Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So last video I have explained you about double entry system of bookkeeping and secondly accounting cycle, user of accounts, financial information and their need, and important terms which are used in accounting. Lastly, systems of accounting. These are the topics already I have discussed in the last video. So if you have not watched, go to the playlist of my channel. Select the subject accounting for CA Foundation. Watch the complete video. Be perfect about the terms. Now in this video I am going to explain you about accounting equation. Very frequently asked in examination. So what is accounting equation and what are the examples of how the transaction will be taken in accounting equation? Actually there are two methods of recording the transaction. One traditional method and one modern method. According to traditional method, we have different types of accounts like personal account, real account, nominal account. We have the golden rules in accounting. Debit for personal account, debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. For nominal account, debit all expenses, losses and credit all incomes and gains. By following those rules, we will debit one account and credit another account. That is a traditional method. And the modern method is recording the transaction according to accounting equation. So that's what I'm going to explain you in this video. So watch till the end, don't skip in between. Take the screenshot of the points which I have written, then I'll explain. Now, first of all, I'm going to explain you about accounting equation. The relation of assets with that of liabilities and owner's equity in the equation form is known as accounting equation. So first of all, accounting equation is an equation which shows the relationship between assets, owner's capital and liabilities. So three things you remember: assets, capital and liabilities. The relationship between these three is known as accounting equation. So basic accounting equation comes into picture when sum total of capital and liabilities equalizes the assets. That means according to this accounting equation, the total of owner's equity plus liabilities will be equal to the assets, right? So accounting equation shows the relationship between assets, liabilities and equity. So what are the assets? Assets are what the business owns and capital and liabilities are what the business owes. So simply to understand what is asset, what is liability. Assets are those things which the business owns and liabilities are those things which the business owes to others. That's what. And under double entry system, every business transaction has twofold effect on the business enterprise, where each transaction effect changes in assets, liabilities or capital in such a way that accounting equation is completed or equated. So already we have discussed this in the previous video also, double entry system. In double entry system, every transaction will have twofold effect. One account is debited or another account is credited according to traditional method. According to modern method, whenever a transaction takes place, one effect will be on assets, the other effect will be either on capital or on liabilities. In this way, after applying this effect, the accounting equation will get satisfied. That means assets will be equal to capital plus liabilities, right? Now, this accounting equation holds good for all the points of time and for any number of transactions. Whatever accounting equation we are writing, assets is equal to capital plus liabilities. This accounting equation will be applied for all times and for all the types of transaction. Any business transaction takes place, it will definitely have the effect on accounting equation. Now the contribution by the owner is termed as capital, the loans are termed as liability. The difference between capital and liability is when the owner invests the money or the money invested by the owner is called capital and the money which is owing to other parties, that is called liability. Simple, bank loan taken is a liability. Therefore, accounting equation may be expressed as follows. So actually how we can represent the accounting equation, assets is equal to capital plus liabilities, or capital is equal to assets minus liabilities. Any way you can write like this, assets is equal to capital plus liability, or capital is equal to asset minus liability. This equation is fundamental in the sense that it gives foundation to double entry bookkeeping system. Whatever we have said about double entry system of bookkeeping, completely it will be satisfied in the accounting equation. Now, an accounting equation is a statement of equality. When we are saying equation, that means it's a statement of equality between the resources and the sources which finance the resources. Resources means assets. So on one hand we have the resources or assets, and the other hand we have sources of finance of those resources. That means whatever resources or assets the business has purchased, what are the sources through which the resources are purchased. So it can be expressed as resources is equal to sources of finance. So this is the complete explanation about accounting equation. Now few examples I will take how the accounting equation will be affected due to different transactions. So if you watch this video with full concentration, definitely in the next video I am going to solve the problems on accounting equation. There you don't find any difficulty. So watch this video with full concentration. Don't skip. Now, effect of transaction on assets, liabilities and capital. So first of all, we are drawing three columns at the extreme right hand side. That is assets, liabilities and capital. Effect on assets, liabilities and capital, and these are the transactions. In this table, I am going to explain how each transaction will affect the assets, liabilities and capital. First, capital brought in cash. The owner invested capital in the business. So what will happen? Cash will increase, and cash is the asset. So there is increase in cash, so increase in assets. At the same time, when the owner invests money, it is called capital. So capital is increasing. So what is the effect of this capital brought in cash? It will increase the asset and also it will increase the capital. No effect on liability. Suppose the owner has invested 5 lakh rupees. So 5 lakh rupees assets increased and 5 lakh rupees capital increased. No effect on liability. Second, loan taken. When the business has taken a loan, cash is coming in. So asset will increase. At the same time, loan is a liability. So liability will increase. So here assets will increase, their liability will increase. No effect on capital. So increase in cash, increase in assets, increase in lender. Lender is a liability. Lender is the person who lends the money, who gives the money. So for a business, lender is a liability. So increase in cash, increase in liability. Now third, purchase of fixed assets or goods for cash. Purchase of either fixed assets or goods for cash. In this case, something we are getting, something we are giving. Suppose goods are purchased, so increase in goods, and goods are the asset. So increase in goods but decrease in cash because cash is going out. For cash we are purchasing. So when we purchase the fixed asset will increase, cash will decrease. Suppose if goods are purchased, goods are increasing, cash is decreasing. And goods and cash, both are assets. That means one asset is increasing and the other asset is decreasing. No effect on liability, no effect on capital. Increase in fixed assets or goods and decrease in cash. That is the effect. Next one, purchase of fixed asset or goods on credit. When we purchase the fixed asset or goods on credit, we are not paying cash. So first of all, fixed assets are coming in or goods are coming in. So assets will increase. the increase in assets. At the same time, there is increase in liability because in future we have to make the payment to the creditors. Creditors are increasing. So increase in asset and increase in creditors. Creditor is a liability. No effect on capital. Similarly, sold goods for cash at a profit. Example, 10,000 worth of goods are sold for 15,000. The purchase price of the goods, cost of the goods is 10,000, but the selling price of the goods is 15,000. That means we are getting 15,000 and the goods are going 10,000. So plus 15,000 minus 10,000. Goods, cash is coming in. Cash is coming in and goods are going out. When cash comes in, 15,000 plus. Goods are going out minus 10,000. So in the assets column, increase in cash 15,000 and decrease in goods 10,000. So 15,000 plus 10,000 minus. The difference 5,000 is the profit, and that profit will be added to capital. So increase in capital, increase due to profit. So when goods are sold for cash at a profit, increase in cash, decrease in goods, here increase due to profit. That is the effect. Next one, sold goods on credit at a profit. Instead of cash, now we are selling the goods on credit. Suppose 15,000 goods was sold. The cost price is 10,000. When cost price is 10,000 and 15,000 is the selling price, 5,000 is the profit. That profit will increase the capital, increase due to profit. Now in this case, our goods are going out 10,000, but debtors are becoming 15,000. So 15,000 increase in debtors, 10,000 decrease in goods. Debtors and goods both are assets. So here increase in debtors and decrease in goods. Increase in debtors by 15,000, decrease in goods by 10,000. Remaining 5,000 will be the profit that will be added to capital. Next, return of goods by the customer. The customer has returned the goods. Then what will happen? Goods are coming in. So decrease in debtors and increase in goods. Goods are coming in, so goods will increase, but debtors will get decreased. But the price, the profit included in sales return will be deducted from capital. Decrease due to decrease in profit. That is the effect. Now return of goods to a supplier. That means purchase return. When there is purchase return, what will happen? Our goods will decrease and liability creditors will also decrease. So decrease in goods, decrease in creditors. No effect on profit. Similarly, payment received from a customer to whom cash discount is allowed. Payment received from a customer. Suppose we have to get 10,000 rupees from the customer, from the debtor. Out of 10,000, 1,000 we have allowed the discount and we have received 9,000. So our cash is increasing by 9,000, debtors are decreasing by 10,000. So increase in cash, decrease in debtors by 9,000, increase in cash by 10,000. Sorry, increase in cash by 9,000, decrease in debtors by 10,000. So 1,000 rupees we are allowing the discount. That is an expense that will decrease the capital. Decrease due to discount allowed. Similarly, payment made to a supplier who allowed cash discount. Just like how we are allowing the discount to our customers, the suppliers are allowing us discount. That means we are receiving the discount. Actually, we have to pay 10,000 rupees to the creditor, but we are paying only 9,000. 1,000 rupees discount received. That 1,000 rupees is an income. So that will be added to capital. Increase due to cash discount received. Capital increase. Now, we are paying 9,000 rupees. So 9,000 rupees are going out. So decrease in assets. Decrease in cash by 9,000. Whereas our creditors are decreasing by 10,000. Actually, we have to pay 10,000 to the creditor. The creditor will decrease by 10,000. 9,000 decrease in cash. And 1,000 rupees is the discount received, that's an income added to capital. Next, payment of expenses like salary. When we pay the salary, our cash is going out. The assets will decrease in cash. This salary is an expense. Due to expense, the capital will decrease. So decrease due to expense. No effect on liability. Next comes expenses due but not paid. Expenses are there, due but not paid. That means no effect on assets. When there is a decrease, when there is a expenses due, it's a liability. So increase in creditors, liability. Whereas decrease due to expenses. Example, salary outstanding, salary due but not paid. It is the expense of the current year. That's why it will be deducted from capital, decrease in capital. Whereas this salary outstanding is a liability. So it will be added, it increase in creditors. Receipt of an income. When income is received, our assets will increase. Cash is coming in. So our asset will increase. Asset will increase. Whereas same time, increase in capital because it's an income. Due to income, capital will increase. Due to expense, capital will decrease. Here it was expenses, so decrease due to expense. Here it is an income, so increase due to income. Now income received, but income due but not received. Income due but not received. So it is an income of the current year, income accrued. So it will be added to assets. Increase in accrued income. Asset will increase. Similarly, the income due to increase due to income. The capital will increase due to income. Right? Income received in advance. When we receive the income in advance, our asset is increasing. Increase in cash. Whereas the liability will also increase because we have received an income which we have not earned. It is the income received in advance. That is a liability. Right? Depreciation on fixed assets. When we provide depreciation on fixed assets, the value of fixed assets will decrease. Assets will decrease. Similarly, depreciation is an expense. So it will be decrease the capital. Decrease due to expense. Next, cash or goods withdrawn for personal use. When cash or goods are taken by the owner for personal use, so cash is going out or goods are going out, it will decrease the asset. It will decrease the asset. At the same time, when drawings are made, the capital will get decreased. So decrease due to drawings. Next one, goods destroyed by fire. Due to fire, some goods are destroyed. It is a loss. When goods are destroyed, the assets will decrease. So decrease in goods, decrease in assets. Similarly, it's a loss. The loss due to fire is a loss on account of which the capital will get decreased. So decrease due to loss. Then bad debts. Bad debts are the irrecoverable debt. It's a loss. Amount due from a customer not receivable. That is bad debt. So due to bad debts, what will happen? Debtors will decrease, assets will decrease. Decrease in debtors. And this bad debt is a loss. So it will have decreasing the capital. So decrease due to loss. Last one, repayment of loan. When loan is repaid, cash is going out. When cash goes out, assets will decrease. Similarly, the liability will also decrease. Because earlier there was a loan, liability. When we repay the loan, the liability will get decreased. So assets decrease and liability will also decrease. Lenders, balance will decrease. No effect on capital. So these 20 are few examples. Don't think that only these 20 examples are there for this topic. No, any number of transactions may come. This is only illustrative to make you understand how each and every transaction will affect the accounting equation. An accounting equation is assets is equal to capital plus liabilities always. So after every transaction, we check whether accounting equation satisfies or not. So this is the complete explanation regarding accounting equation, very important topic. In the next video, inshallah, I will do the problems on this accounting equation.